Good morning, everyone, and thank you for choosing Market Briefing, market analysis, and financial news. Every day, our goal is to provide you with a thorough and knowledgeable analysis of the most relevant financial news to help you navigate the complex economic landscape. Let's begin our daily review. Market Analysis, November 15, 2023. Here is a 985-word script summarizing the key details from the provided financial news text. Good morning and welcome to today's market briefing. Stocks in Asia are rallying today, tracking Wall Street's strong gains as hopes build that the Federal Reserve may be nearing the end of its aggressive rate hike cycle. The MSCI Asia Pacific Index rose for a third straight day, boosted by the S&P 500's nearly 2% jump overnight. That was the S&P's largest single-day gain since April. Driving the rally was October's U.S. inflation data, which came in lower than expected at 7.7% year-over-year. Market expectations for Fed policy have shifted significantly on the inflation slowdown. Fed fund futures now show odds of a rate cut by July rather than further hikes. Still, Fed officials have cautioned there is a ways to go before inflation reaches the 2% target. In Asia, futures point to a strong open for Japanese, Hong Kong, and Australian shares. Chinese stocks also look set to advance. Beyond stocks, bonds rallied globally. Yields on U.S. 2-year notes plunged 23 basis points while 10-year yield slid 21 basis points. Japan's 10-year yield hit a one-month low. The strong bond performance reflects bets on Fed easing. In currencies, the U.S. dollar retreated 1.2% against a basket of major peers, its worst one-day drop this year. The dollar was steady in Asia trade today. Most Asian currencies strengthened versus the greenback. Turning to China, the POC injected the most cash into the banking system since 2016, exceeding market expectations. Analysts said the liquidity injection aims to support China's economy while also managing risks from local bond issuance. Upcoming Chinese data today will provide new signs on economic health. Markets are also awaiting the Xi Biden summit for any thawing of U.S.-China relations. Earnings from major Chinese tech company Tencent are due later today. In Australia and New Zealand, bonds rallied following U.S. Treasuries. Lower yields supported stock gains too, with futures suggesting a strong open for shares. Recapping Wall Street, the S&P 500's rally was its best single-day performance since April. Growth stocks led gains, with Tesla and Nvidia both surging around 10%. Many see the inflation data as convincing evidence of a Fed pivot. Further data showed the U.S. economy may be slowing. Household expectations for inflation fell sharply in November in a New York Fed survey. Retail sales rose 1.3% in October, slightly below forecasts. Beyond stocks, speculative-grade corporate bonds rallied the most since 2020 on bets of a less aggressive Fed. The U.S. dollar tumbled versus major peers. Before proceeding with our analysis, we would like to remind you that your support is very important to us. If you enjoy this video and find our content helpful and engaging, please consider giving it a thumbs up and subscribing to our channel. This helps us grow and provide you with even more quality content. Now, let's get back to the news on the financial markets and the latest updates. In currency news, the U.S. dollar is struggling to find demand after heavy losses against major rivals yesterday. The dollar index dropped 1.5% on Tuesday, posting one of its biggest one-day declines this year. This came as U.S. inflation data showed consumer prices rose 3.2% in October, down from 3.7% in September. The softer inflation drove yields on 10-year U.S. Treasuries below 4.5% to two-month lows. The dollar saw the biggest losses this week against the New Zealand dollar, down 2.32%. Followed by the Australian dollar, down 2.22%. Turning to stocks, Wall Street rallied on the inflation news with the S&P 500, Dow Jones and Nasdaq all posting gains. The mood is extending into today's trading with U.S. index futures moderately higher. In economic data, China reported October retail sales rose 7.6% year-on-year while industrial production was up 4.6%, slightly topping forecasts. In the UK, consumer price inflation dipped more than expected to 4.6% annually in October from 6.7% in September. And in Japan, Industrial output rose a monthly 0.5% in September. Looking deeper at currency markets, the British pound climbed above $1.25 for the first time since mid-September, gaining over 200 pips on the day. However, early Wednesday it has pared some gains after the softer UK CPI release. The euro also saw strength, breaking 1.08 and approaching 1.09 against the dollar, hitting an 11-week peak. The dollar-yen pair snapped a 6-day winning streak with the dollar's weakness, though has edged up slightly today to around 150.70. Turning to commodities, gold prices rose nearly 1% supported by declining U.S. yields. The precious metal continues trending higher today, up about 0.35% to $1,970 an ounce. Now a closer look at the day's currency market action. The US dollar index slid to a 2-month low below 104, extending the previous session's steep losses. Deteriorating US economic data has fueled recession worries, driving yields lower and appetite for the safe haven dollar down. The Fed's aggressive rate hikes through the year are showing signs of slowing the economy. In the UK, sterling initially jumped on the lower than expected inflation reading, which could ease pressure on the Bank of England to continue hiking rates aggressively. However, the pound retreated from session highs after the data still showed elevated price pressures. Markets expect the BOE to slow the pace of rate increases at its December meeting. The euro rallied to its highest level against the dollar since August after the US CPI release. Lower US inflation could mean reduced Fed tightening, while Eurozone price growth may be nearing a peak. However, the ECB is still likely to deliver another 75 basis point rate hike in December given stubborn core inflation. In Japan, the yen saw little reaction to the better-than-expected industrial production data. The currency remains weighed down by the Bank of Japan's ultra-dovish policy stance compared to peers. The central bank has signaled it will continue asset purchases to support the economy. Gold prices were boosted by the sharp pullback in Treasury yields and US dollar. A less aggressive Fed is positive for non-yielding bullion, while recession risks add to the metal's safe haven appeal. However, further dollar weakness may be needed for prices to retest September's highs above $2,000. Key events this week: China retail sales, industrial production, fixed asset investment, Wednesday. Japan industrial production, Wednesday. UK CPI, Wednesday. US retail sales, business inventories, PPI, Empire Manufacturing, Wednesday. Target earnings, Wednesday. China new home prices, Thursday. US initial jobless claims, industrial production, Thursday. Walmart earnings, Thursday. US President Joe Biden and Chinese President Xi Jinping expected to speak at APEC Leaders Summit, Thursday. Cleveland Fed President Loretta Mester, New York Fed President John Williams and Fed Vice Chair for Supervision Michael Barr speak, Thursday. Bank of England Deputy Governor Dave Ramsden and ECB President Christine Lagarde speak at event, Thursday. U.S. housing starts, Friday. U.S. Congress faces a midnight deadline to pass a federal spending measure, Friday. ECB President Christine Lagarde speaks, Friday. Chicago Fed President Alston Goolsbee, Boston Fed President Susan Collins and San Francisco Fed President Mary Daly speak, Friday. Some of the main moves in markets. Stocks. S&P 500 futures were little changed as of 10:32 a.m. Tokyo time. The S&P 500 rose 1.9%. Nasdaq 100 futures rose 0.2%. The Nasdaq 100 rose 2.1%. Japan's Topix index rose 0.8%. Hong Kong's Hang Seng index rose 2.4%. China's Shanghai Composite Index rose 0.6%. Australia's S&P/ASX 200 index rose 1.7%. Currencies. The Bloomberg Dollar Spot Index was little changed. The euro was little changed at $1.0869. The Japanese yen fell 0.1% to 150.59 per dollar. The offshore yuan fell 0.2% to 7.2654 per dollar. The Australian dollar fell 0.3% to $0.6487. Cryptocurrencies. Bitcoin fell 0.1% to $35,543.58. Ether fell 0.2% to $1,978.95. Bonds. The yield on 10-year treasuries was little changed at 4.44%. Japan's 10-year yield declined 7 basis points to 0.780%. Australia's 10-year yield declined 15 basis points to 4.52%. Commodities. West Texas Intermediate crude was little changed. Spot gold was little changed. In conclusion, we'd like to thank you for watching Market Briefing, market analysis, and financial news. If you enjoyed our insights and found the information helpful, please consider leaving a like and subscribing to our channel to stay updated with future analyses. Thank you again for your support, and we'll see you soon with more interesting news. Remember, the information in this video is purely informational and does not constitute investment advice. Always consult with a professional before making financial decisions.